Good morning, this is Jack from Chartered Markets, and this is the pre-market webinar for the morning of Wednesday, the 8th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com, and it's published on YouTube after a delay of 24 hours. All right, great. Okay, yesterday we saw, obviously, many blood-curdling threats of apocalypse and tweets suggesting that the US might be about to use nuclear weapons on Iran and they might be erased from history. But in the end, by the time the deadline expired at 8 p.m. EST, the US accepted the Iranian 10-point plan for peace. And that is going to be discussed, and they're going to be working on a more permanent piece over the next couple of weeks. In the meantime, obviously, equities are up and oil is down, and that's probably going to last. Although there are a couple of things. Oh, why did I switch the room? Because I accidentally deleted the old one. It's actually it's I'd love to say that there was some sort of deep strategy involved in doing it, but in fact that would not be the case. So I accidentally pressed the wrong button. The room disappeared, so I had to create a new one. So that was the reason. All right. We've got obviously a big rally here. Now the question is this going to last? Well, I think it's going to last a few days. I'm going to be doing a post after I've got everything out this morning, and I'm going to be looking at all the short-term patterns, and I'll go through those now. But I'm thinking oil's going to go down. We should see a sizable rally on equities. We could even see a high retest on equities. And there is a chance, obviously, that these talks are going to fail. It's kind of a bitter pill for the US to swallow, because really the Iranians' 10-point plan for peace was not particularly kind to the US. It was talking about reparations, although there's a way around that, but it's talking about Iran being left in control of the Strait of Hormuz. That too is something. There's a couple of things which are the Iranians wanted for all hostilities to cease, including the ones in Lebanon. Israel is up for a ceasefire against Iran, but not for a ceasefire in Lebanon. There's also the Strait of Hormuz. Iran is saying that they're going to be letting 10 to 15 ships through. Now, before the war, of course, it was doing something like 100 to 200 ships a day. So if they're talking 10 or 15, are they talking about per day? Are they talking about in the next 2 weeks while everything's being negotiated? That's not a lot of ships. Also, if they're effectively taking the reparations out of the fees they are charging for people to get through the Strait of Hormuz, then what's that going to mean? They're splitting. Basically, the idea is I think they're charging a couple of $1 million a vessel. They're splitting that with Oman, but effectively they'd be taking their reparations out of that. Now, obviously, from their point of view, they want to get 200. They want to get 100 vessels through a day rather than just 10, because they'll make 10 times the money. So there's a variety of things that haven't really been firmed up yet, and obviously negotiations will be going on the next 2 weeks. But I think this is solid for probably at least a week, subject to further insanity from the White House. So, and I have targets for the upside for this. So we'll go through those. Most of those targets aren't really the ones I've marked in here. I've marked in a whole load of targets here. I mean, there's an IHS here on ES, which is broken up with the target 69.75 area. Got a nice one here on NQ with a target in the 26.050 area. I've got one on RTY with a target in the 27.33, 27.40 area. I've got one on YM with a target in the 48.970 to 49.400 area. And I didn't really have anything on DAX and the STX, but I've got a very nice IHS here on Nikkei with a target up in the 59,000 area. But these aren't the ones I'm mainly looking at. It's just in this sort of situation, I tend to be looking more at the dog than the tail, and the dog is the US and is the main indices here. But here we've got a nice looking IHS which is broken up on SPX with a target in the 69.12 area, and I think that's got a good shot of making target. We could see high retests across the board here. Equally, if the negotiations fail to go well, those could be the second highs of double tops. We will see. We saw a break over the daily middle band yesterday. This is a follow through, and I think it's going to get us back comfortably over the. It'll gap us back up over the 200 DMA, which was the key resistance level above. Doing the same on the Qs. Here we've got an IHS which on a sustained break up, because obviously we're not seeing the overnight action here. So, but this is a nice IHS. A sustained break up looks for 627.5 and may well see the all-time high retest. Looking at Dia, which saw a second close back over the daily middle band yesterday. Here we've got a nice looking IHS, hasn't broken up yet. Not quite as nice as some of the others, but really not bad. And a sustained break we're likely to see a break up at the open today. Sustained break up would be looking for the 486 area. Looking at the IWM chart, so bear with me a second. IWM, I think we had something like the third close over the daily middle band yesterday, fourth. So we're not going to see an immediate breakdown below. We are going to break up from this double bottom, and we've got a target on here in the 26628 area. These are all decent targets, and I think these all have a pretty good chance of making target. And I'm leaning towards these peace talks at the absolute minimum going on for 3 or 4 days. At the maximum, well, I think it could go the 2 weeks and actually lead to a real peace settlement. So whether that the market then heads up, I mean, it's got a number of headwinds. Got the tech bubble. We've got the fact that the U.S. economy's stalled. We've got the increasing unpopularity of Trump with everybody in the world, who is either allied or used to be allied with the US or deals with them on any basis for anything. So, I mean, there are a number of headwinds here. But, I mean, can we head back up and retest the all-time highs? Sure we can. And these patterns will get us a lot of the way there. Do we have any decent reversal pattern here on DAX? Got to go with no. But we've got a nice looking double bottom here on Nikkei. It's not quite as nice as the IHS on the futures chart, but it's pretty solid and goes most of the way back up into a retest of the all-time high, which is now on the table again. So I'm liking the rally here. We've got some buy signals which will make target, although the ones on the daily RSI 5 buy signals on Dia and IWM have already reached the possible near miss target, but the one on Nikkei hadn't. These are all likely to reach the full targets. I'm expecting to see a decent rally, and if we are going to see these talks fail, I'll be surprised to see that happen before the weekend. So we'll see how far it gets in the next couple of days. But it may well be that a real peace will be negotiated from here. The problem is that Trump's immensely vain, and this does involve eating some crow. This is a defeat. So the question is whether he's prepared to swallow that, or whether he thinks he can just lie his way through it, or the usual stuff. And I'm thinking that he can probably make it look a lot better by blaming Hegseth and sacking him. And Hegseth is a complete incompetent. He should be sacked anyway. So that would be a big benefit for everybody. So we will see how it develops. But at the moment, it's looking pretty promising. We've got a lot of targets a lot of indices breaking up with ambitious targets, and all of those targets look potentially doable. All right, let's have a look at the DX chart. Now, a lot of the DX, I did a post last week talking about the bull case on DX. I have to say, a lot of that DX bull case involved the war not stopping. And really, that was the best case scenario here. So now we've still got an issue on oil. We've still got Strait of Hormuz is very much open to question. The whole peace process is open to question, but it's in negotiation, and we will see how it develops. In the meantime, I've got a nice looking double top here, which is trying to break down with a target in the 96.76 to 96.99 range. And I'm thinking that may well make the target. However, if the Strait of Hormuz is still effectively closed, and if peace talks are struggling, and if Israel starts bombing Iran again, then we may well find the dollar goes up anyway. But at the moment, my working assumption is it's going to go down, and that is backed up by this IHS on USD, which is broken up with a target in the 1.1875 area. All right, looking at bonds. Bonds obviously have been going down every time the Iran war intensified, and they've obviously seen a nice break up. Does this look kind of like a bear flag? Yes. And we still haven't got over the monthly pivot yet, but what I'd say against that is we have a nice quality double bottom here, which is broken up with the target in the 115.26 area, and we still have daily RSI 5 sell signal on TYX, daily RSI 5 sell signal on TNX, and we've got a daily RSI 5 buy signal on TLT. There's still quite a lot of pressure up on bonds here. So I'm thinking this has still got a good chance of making this target, and we can see a rally higher than that. I'd quite like to see all these outstanding daily signals on the bonds charts make targets. That would involve going up at least some from here. After that, well, I've got serious doubts about anything positive happening on bonds for the rest of the year. But this is positive, and we've got the signals for it, and we've got a pattern for it. I think there's have a good chance of making target. All right, we've seen big reductions in oil overnight. This is down over 20. CL is down basically 25 from the high yesterday. These are impressive moves. But I would say on straightforward moves, it is far from clear that we're actually getting there will be much traffic going through it. 10 or 15 is not a lot. If there's not going to be a lot of traffic going through it, then that's not going to help oil prices, and we'll probably find these go up again. If the Strait of Hormuz is actually on its way to being cleared, and there's going to be relatively free trade going through it, whether or not there are tolls, then the oil price should be coming down. But I'd be thinking it would be coming down to previous levels over 6 months to a year, maybe. I'm not thinking that would happen immediately. In the short term, I'd be wondering about a long on oil here. And I'm thinking that certainly with a cloud over the amount that can go through the Strait of Hormuz, it is open to question how much more short-term downside there is here. We do have some daily sell signals which are fixed here, but I am wondering about a possible head and shoulders forming here on heating oil. But I'm not taking any of the obvious patterns on here particularly seriously. I'm not expecting to see a big reversal back down to pre-war levels, and frankly, I'm not even sure if it's sustainable trading under 100 unless the Strait of Hormuz is reopened. Looking at NG, negative reaction overnight. Not really seen anything to suggest over the course of this war that there is really that NG prices have got anything to do with what's happening in the Strait of Hormuz. I'm leaning to see a bit lower here. I'd quite like to see this nice looking trend line here made. And we haven't quite reached that target, but nothing particularly exciting happening here anyway. Now, precious metals. Now, on the bigger picture, nice bull flag channel on gold, decent looking flag on silver. I'm leaning towards the upside. We've also been seeing this. I'm not sure how much to read into it, but obviously we've been seeing gold go down when the war intensified in Iran, and of course peace is breaking out at the moment, and gold went up. Not sure how much to read into that, but I'm generally bullish on gold here, and I'm liking the pattern setup to return to the all-time highs. So watching this with interest, we've got an IHS which has broken up with a target in the 5111 area, and this is a nice IHS. Yes, I won. I haven't marked in the arrows because, well, it's kind of ugly. So the right shoulder is looking really unbalanced with the left. But I'm still leaning towards the upside, testing again the monthly pivot as resistance. Palladium has broken the monthly pivot as resistance, and so has platinum. We did got potential inverted head and shoulders here too. Again, I don't particularly like them, but okay-ish, I guess. So I am thinking in my head often make the targets here and be about the 70-40 area, I think. On platinum, I'd be looking for a target really about the 2250 area. I'm thinking they've got a good shot of making these targets, and that's because actually I'm kind of leaning bullish on all of these anyway. We will see how that goes, but if that goes well, then I'm expecting to see all the precious metals do pretty well to the upside. HG, not a precious metal, but an end of the war in Iran is probably short-term bullish anyway, leaning towards some more upside, not seeing an obvious target for that. In terms of the others, KC, this looks like a big overall bear flag for me. We have do we have an open target here? No, we've made the target. So sugar, quite a deep retracement here. Still wondering if we're going to see a retest of the highs, but this is not a bull flag forming. It is too big. On the CC, Wondering about this drifting into a retest of the low soon. This is pretty weak source action. This could be a double bottom when we do see it reach a retest of the low, but it wouldn't surprise me to see it go down further. On CT, I'm going to do a post on this. I'm still quite liking the upside here, and partially what it was a disadvantage. One thing I was going to write about this in the context of the war continuing and saying actually these aren't really that ambitious targets, but I think given that they are that ambitious targets, and we're at the bottom of a big down cycle from the highs in 22, and these are relatively modest retracement targets, I'm still feeling pretty good about these. I'm going to be doing a post in the next few days about talking about the upside potential on cotton, on wheat, on corn, and actually now we're forming an IHS on soy as well. I'm thinking these could make targets regardless of what's happening in the war. So we will see how that goes. Lumber, wondering if it's resuming the downtrend, and it looks really looks on the bigger picture like a downtrend. Wheat, this looks like a bullish consolidation. Corn looks like bullish consolidation. Soy, I think we're forming an IHS right shoulder. ZL, keeping an open mind. We have retested this high. This could be a double top. I'm not seeing a lot of evidence to suggest that should play out. Live cattle is breaking out to the upside. And lean hogs, I'm wondering if this looks like a bull flag. I'm leaning towards seeing a retest of the high. All right, great. Let's have a quick look at questions, of which we have none. In which case, I think that's a wrap. Everyone take care. I'll catch you guys tomorrow morning. Watch out for the post I'm going to be publishing within a couple of hours. But basically what I'm going to be doing is I'm going to be posting all of those patterns on the RTH indices and calling all those as targets and saying that I think regardless of what happens with the talks, as long as the talks don't fail in the next couple of days, I think they'll all have a pretty good chance of making the target. All right, great. In that case, I think that's a wrap. Everyone take care. I'll catch you guys tomorrow.